was a war without bombs. No generals, no trenches. And yet, its battlefield stretched from Beijing to Silicon Valley, from Wall Street to the smallest steel mill in Ohio. The world called it a trade war. But in truth, it was a contest of dominance. An economic duel between two empires that no longer trusted each other. It began with promises of fair trade and national security. Words that sounded noble. But beneath them lay something darker. Fear. Fear that one side was rising too fast. Fear that the other was losing its grip. And when fear drives economics, profit turns into power. Power into policy. And policy into conflict. This is the story of how two nations, bound by trade, divided by ambition, reshaped the balance of the world's economy. And the war still isn't over. The trade war, when two giants collided, and the world paid the price. The illusion of victory. They called it a war without bullets, a conflict fought not on battlefields, but in boardrooms and across trading floors. A war waged with numbers, tariffs, and currencies instead of guns, tanks, or missiles. It was a struggle for control, influence, and survival in a world where money had become more powerful than any weapon. For decades, the idea of globalization promised prosperity for all. Politicians, economists, and business leaders assured us that free trade would lift nations out of poverty, integrate economies, and make conflict obsolete. The United States and China stood at the heart of that dream, two economic superpowers bound together by mutual gain. America would provide innovation, capital, and consumers. China would provide labor, manufacturing, and speed. Together they would drive the 21st century. But beneath the glossy reports and celebratory speeches, a quieter truth was unfolding. Globalization wasn't a marriage of equals, it was a fragile partnership of convenience. Each side depended on the other, but each also believed it could outsmart the other in the end. The system that promised shared success was slowly building the foundations of rivalry. What if the idea of win-win was an illusion from the start? What if the same system that created modern prosperity was also constructing an economic time bomb? Today we unravel the story of how a silent economic alliance turned into an all-out financial war. A war that reshaped global politics, shattered supply chains, and still reaches into your wallet, your job, and your future. This is the trade war, when two giants collided, and the world paid the price. The spark before the storm, how it all began. Long before the headlines of tariffs and bans, there was a moment of quiet cooperation, an unspoken agreement between Washington and Beijing, forged out of necessity and ambition. In 1978, China was emerging from one of the most turbulent periods in its modern history. The scars of the Cultural Revolution ran deep. The economy was stagnant, factories outdated, and millions struggled to rebuild their lives. Yet amid that uncertainty rose a pragmatic leader, Deng Xiaoping. With a few simple but radical words, he changed China's destiny. To get rich is glorious. That phrase marked the beginning of China's economic awakening. Under Deng, China opened its doors to the world, inviting Western capital, technology, and expertise. Special economic zones sprouted along the coast, foreign investors flooded in, and cheap labor became the magnet that pulled in global industries. American corporations saw opportunity. Manufacturing in China meant cutting costs by up to 80%. From electronics to toys to clothing, American brands could now deliver cheaper goods at home, fueling consumerism and keeping inflation low. In exchange, China gained what it desperately needed: technology, jobs, and access to the world's largest market. The arrangement seemed perfect, a balance of mutual gain. America bought, China built. China saved, America spent. It was a circular dance of production and consumption that defined global trade for nearly 4 decades. But that golden loop was also a chain, binding both nations together in dependence. America needed China's factories to sustain its consumer-driven economy. China needed American buyers to keep its growth alive. Neither side could walk away without risking collapse. And while the world was celebrating cheaper smartphones and booming stock markets, China was quietly building something far more important: power. It wasn't just manufacturing anymore, it was learning, adapting, and preparing to lead. The silent rise, China's economic ambition. By the late 1990s, the results of China's reforms were undeniable. From a poor, agrarian country, it had transformed into a global manufacturing powerhouse. Between 1980 and 2000, China's GDP multiplied tenfold. Cities like Shenzhen, once small fishing villages, became glittering megacities of factories, workers, and ambition. In 2001, China's admission to the World Trade Organization (WTO) marked a turning point. Western leaders welcomed Beijing with open arms, believing that integrating China into the global system would make it more democratic and cooperative. But that assumption underestimated China's strategy. While Western nations outsourced production, China absorbed their technology and built up its industrial base. What began as an assembly line for foreign brands evolved into a laboratory for innovation. The results were staggering. By 2010, China had become the world's largest exporter. By 2014, it surpassed the US as the world's largest economy by purchasing power. And by then, Beijing's message had changed. It no longer wanted to be the world's factory. It wanted to be the world's leader. It invested heavily in cutting-edge fields: artificial intelligence, renewable energy, biotechnology, 5G networks, and quantum computing. Companies like Huawei, Alibaba, and Tencent became symbols of China's technological rise. Yet this rapid ascent came at a cost for America. Between 2001 and 2018, the U.S. lost nearly 3.7 million manufacturing jobs to what economists called the China shock. Towns across the Rust Belt were hollowed out, their factories shuttered, their pride wounded. Still, Wall Street rejoiced. Corporate profits soared as supply chains became more efficient. Consumers enjoyed lower prices. For years, this uneasy balance held, until politics caught up with economics. The trigger, 2018, tariffs, tweets, and turbulence. When Donald Trump entered the White House in 2017, he carried a clear message. America had been cheated and it was time to fight back. His slogan, "Make America Great Again," wasn't just political theater. It was a declaration of economic rebellion. Trump argued that America's trade deficit with China, which exceeded $375 billion, was proof that the U.S. was losing. He accused China of stealing intellectual property, manipulating its currency, and using unfair subsidies to dominate industries. The stage was set for confrontation. In 2018, Trump fired the opening shot, imposing tariffs on $50 billion worth of Chinese imports. Beijing retaliated immediately. The U.S. escalated further, adding tariffs on an additional $200 billion. By the end of the year, over $500 billion in trade was tangled in restrictions. For the first time in the modern era, two superpowers were weaponizing trade like artillery fire. The world's markets quaked. Stock indexes fell, supply chains froze, and companies scrambled to adjust. Farmers in the American Midwest lost their biggest buyers overnight. Tech giants like Apple and Intel warned of disruptions. No one could predict how far it would go, or who would blink first. The breaking point, the world's supply chain shatters. By late 2019, the trade war had mutated from a political standoff into a global economic shock. For decades, globalization had made the world operate like a single vast factory. Raw materials from Africa, components from China, design from California, and assembly in Southeast Asia. Now, that seamless system was unraveling. Tariffs made entire product lines unprofitable. Companies that once relied on just-in-time delivery found themselves paralyzed by new costs and uncertainty. The gears of global commerce began to jam. And then, just as tensions reached their peak, the world was hit by something no one had foreseen: a pandemic. When COVID-19 erupted in 2020, supply chains that were already strained collapsed entirely. China's strict lockdowns halted production. Shipping prices soared by thousands of %. Factories from Europe to America sat idle, waiting for parts that never arrived. The realization was brutal. The world's most powerful economy could not function without its biggest rival. Even essential goods, masks, gloves, medical equipment, came largely from China. It wasn't just about trade anymore. It was about dependence. The trade war had exposed the fragility of globalization, and the pandemic had magnified it. The fallout: winners, losers, and the invisible cost. The trade war was meant to protect American jobs, but the numbers told a different story. Tariffs ended up costing U.S. companies over $300 billion, most of which was passed on to consumers. Prices rose, uncertainty spread, and industries struggled to adapt. China, while hurt, proved more resilient than many expected. Rather than collapse, it pivoted inward, launching ambitious plans to achieve self-sufficiency in critical sectors like technology, agriculture, and energy. The U.S. responded by trying to diversify supply chains, encouraging firms to relocate to countries like Vietnam, India, and Mexico. Yet rebuilding global networks was far harder than dismantling them. But beyond the numbers, something deeper broke: trust. For decades, both nations had maintained a delicate fiction, that cooperation and competition could coexist. The trade war ended that illusion. From Washington to Beijing, the narrative shifted. Each side began to see the other not as a partner, but as an existential threat. What began as tariffs soon evolved into tech bans, sanctions, and espionage fears. Huawei was banned. TikTok faced scrutiny. In response, China restricted exports of rare earth minerals and vital raw materials. Each move signaled something chilling: that globalization itself had become a weapon. The failed fixes: diplomacy without resolution. In January 2020, after 2 years of escalating chaos, both sides staged a diplomatic truce. The Phase 1 trade deal was signed with fanfare in Washington. Smiles, handshakes, and promises filled the room. China pledged to purchase an additional $200 billion in U.S. goods. The U.S. promised to roll back some tariffs. But behind the scenes, both sides knew the truth: the damage was already done. By the end of 2021, China had fulfilled less than 60% of its commitments. The U.S. kept most of its tariffs in place. Trust remained broken. And while politicians talked about trade, the real battle had shifted to technology. Control over semiconductors, AI systems, and data became the new front lines of the conflict. The trade war wasn't over. It had simply evolved into a tech war, one that would determine who leads the digital age. The echoes today: history repeats in new forms. Even today, years after the first tariffs were imposed, the echoes of that war still shape the global economy. Tariffs remain. Tech restrictions tighten. Both nations are actively decoupling, unwinding decades of interdependence. Yet paradoxically, trade between the two reached an all-time high of $690 billion in 2022. The contradiction is striking. Politicians talk of rivalry, but businesses keep trading. The world's economic bloodstream continues to flow, even as its arteries clog with politics. And around the globe, the ripple effects continue. Nations are turning inward, adopting protectionist policies. Supply chain nationalism is spreading. Currency devaluation and debt diplomacy are redrawing alliances. Globalization didn't die, it became more dangerous. The same system that once promised unity now fuels division. Modern parallels: the new Cold War in disguise. The trade war is no longer about tariffs. It's about ideology and dominance. In the 20th century, superpowers competed for oil, land, and weapons. In the 21st, they compete for data, chips, and control of information. China's Belt and Road Initiative is building infrastructure and digital networks across continents. Ports in Africa, railways in Europe, fiber cables in Asia. It's a vision of globalization with Chinese characteristics. Meanwhile, the U.S. is forming counter-alliances, from the CHIPS Act to AUKUS, to protect its technological edge and secure semiconductor independence. Both claim to be defending their way of life. Both are, in reality, racing for supremacy. And for smaller nations caught in the middle, the stakes are enormous. Align with Washington and risk losing access to China's market. Side with Beijing and face Western sanctions. It's a balancing act that defines 21st century geopolitics. But perhaps the most haunting question remains: can there even be a winner? Or is the real tragedy that this economic war drains everyone, except those who profit from chaos? Lessons from the battlefield: 3 takeaways. After years of tariffs, losses, and political theater, 3 enduring lessons emerge from this global conflict. 1. Interdependence is the real power. The US and China both tried to wound each other, and both suffered in return. The trade war proved a simple truth: in a connected world, harming your rival means harming yourself. 2. Economic warfare never ends, it only changes form. Today it's tariffs, tomorrow it's technology or information. The tools evolve, but the motive, control, never changes. 3. The real cost isn't measured in money, but in trust. Markets recover, factories reopen, and new trade routes emerge. But rebuilding trust between nations may take generations. A warning and a choice. The trade war was never just about trade. It was about power wrapped in the language of prosperity. Every empire in history has believed it could dominate global commerce, until it discovered that the very system it built was too complex to control. Today, the US and China face that same paradox. Both seek dominance, but both depend on the other. Neither can win without destabilizing the world they hope to rule. The question that remains isn't who wins, but whether humanity can survive a century defined by economic weaponization. Will we learn from this, or repeat it under new technologies and new flags? Call to action, the invisible hand reimagined. If history teaches us anything, it's that economies reflect people, our fears, ambitions, and pride. The trade war isn't over. It continues in every negotiation, every stock market fluctuation, every piece of technology that crosses a border. It's reshaping our future quietly, relentlessly. So the next time prices rise or a product vanishes from shelves, remember, these are not accidents of the market. They are the ripples of choices made by nations, corporations, and leaders locked in a struggle for power. And perhaps the most important question for all of us is, who truly benefits when giants collide? Because sometimes the real story of wealth isn't about who gains the most, but who understands just how fragile it all truly is. You've been watching World Financial Mysteries. To uncover more hidden truths behind global wealth, power, and the forces shaping our world, subscribe, stay curious, and remember, understanding the system is the first step to surviving it.